Hello, this is Joe Pryor of the virtual real estate team in Oklahoma City. It's Thanksgiving weekend, so I'm a little more casual than I normally am in terms of these videos, but it's a good afternoon off. This is what we need from time to time. And as we get towards the end of 2017, I want to talk a little bit about our market conditions that we've experienced in Oklahoma City this year. One of the things that if you read the national publications that you see a lot of articles on, a lot of information on, is the lack of inventory that's out there. Obviously, we know that we went through some tough times after 2007, 2008. We know there was a lot of repos, a lot of foreclosures being purchased, a lot of cash business. But as lending has gotten better, and certainly it's really modified quite a bit, what we've had is a situation where houses are really selling pretty rapidly everywhere in the United States. And as that happens, when there's a lack of inventory, then prices go up quite a bit more. It's just a supply and demand issue. Well, Oklahoma City has been unique if you compare it to national trends. So if I take the Oklahoma City multiple listing service and I look at the number of listings that we have, and granted, this is not just in the Oklahoma City area. It can be a lot farther out. It could be 50, 100 miles away. But overall, if you look at this year versus last year, we're at least 18% higher in homes for sale and condos and townhomes, everything that's considered a one-type property in Oklahoma City. And so we've had a little bit better buyer orientation. Now, this does tend to keep the appreciation down overall, but at the same time, it makes for a better balanced market. It makes for a fact where buyers can really buy something that they think is a decent value, a par value, not just something because they're having to pay more than they should because there's nothing there. So I think it's been good for Oklahoma City. Now, that being said, we all know that real estate is local and hyper-local. And so if we drill down into the details, we'll find some housing that's selling much faster than others. But to a great extent in 2017, this has been an existing home market. The problem we've had with new construction is that permits have been down, and they're down because of the lack of land that's available that has utilities on it or close by. Because if you start talking about $1 million to $2 million added on to the cost of development, then all of a sudden you're building $300,000 and $400,000 houses, not $200,000 houses. And so that's been an issue of affordable housing, and that's where the existing home market has gotten very strong. Now, on the other end of the scale, one trend that we see continuing is investment. Investment real estate, which is my specialty, has been awfully strong this year. And we've certainly seen rents going up. Now, a lot of that has to do with the fact that Oklahoma City is still the 9th fastest growing metro area in the United States. In fact, we're up to 1.373 million. Now, I've had about $100,000 less than what I've reported, but that is current statistics, with about an 8.5% increase in the job market and the number of jobs that have been filled in Oklahoma City, and a 3.9% unemployment. And so that's been very, very strong. A lot of people are going to come in and rent. The rental market is very strong. The market, to a great extent, reflects national trends of about 62% owner occupancy and the rest being investment real estate where people are renting. So that is the Oklahoma City market in 2017. I'm going to do another video on what I perceive will be the 2018 market, but just to kind of give you a little bit of preview of that, I think it's going to be much the same in 2018 that we have seen in 2017. A strong market, but a balanced market, something that can make both buyer and sellers happy. To me, that is a great market. This is Joe Pryor of the virtualrealestateteam.com in Oklahoma City, where we deliver traditional real estate values at the speed of technology.